again, and welcome to our look at the upcoming Tuesday, September 2nd trading session. We have the economic calendar in front of you, and almost immediately at 12:30 GMT, we have the interest rate decision coming out of Australia, and what really matters is the statement. So expect a lot of volatility in the Australian dollar at that point in time, but quite frankly, we feel that the market will probably be very difficult to deal with. Right now, it looks like it wants to fall, but fall back into consolidation. So we think the Aussie might be a little bit on the soft side. It's dangerous to play right before an announcement that especially when they're focusing on the statement itself, because it can be interpreted in so many different ways. So the Australian dollar, unless you have some real experience, probably should be avoided for the day. Now, that being said, there are other things to pay attention to. We get into the Americas, and ISM manufacturing employment and ISM manufacturing PMI. We're going to be paying more attention to the PMI. It's anticipated to come out at 56.8. That is a pretty significant number, and it will have an influence on the U.S. dollar as well as U.S. stock indices. Of particular note is the S&P 500, which is just underneath the highs. We closed at 2003 on Friday. We're closed on Monday, so obviously we didn't do anything for Monday. And the highs are 2005, so we're right there. A strong ISM number could be reason enough to just throw us right over the fence and make us go higher. So that being said, we will definitely be paying attention to that. Also pay attention to the oil markets. A strong manufacturing number could bring the demand quotient back into play for the light sweet crude West Texas Intermediate grade. Looking at the evening, we've got GDP coming out of Australia, and yes, that normally would be an important announcement, but with the interest rate decision, it's really hard to imagine that it's going to be some earth-shattering display. Looking at the charts, you can see the euro dollar tried to rally and just fell flat for the session on Monday. Now, again, keep in mind that the Americans and Canadians weren't around, so this was essentially just what the Asians and the Europeans thought, but really not a whole lot to give you hope for the euro to continue going higher. So quite frankly, we anticipate that it goes down to the 1.30 level fairly soon. Looking at the S&P 500, you can see we're just underneath that high. So again, those ISM numbers, if they come out strong, we anticipate a breakout above 2005, and we would be buyers there. Otherwise, we'll probably just grind sideways. We'll continue to look to short-term pullbacks as potential buying opportunities. And you can see that the oil markets did stop just short of the 96 level. We have the 96 level as being somewhat significant. If we can get above there, really the next thing that we see is a potential move to about 98 or so, maybe even 98.5 as we consolidate in this area. Those ISM numbers will be crucial for that, though. And with that, we've looked at the upcoming Tuesday, September 2nd trading session.